Hi, I'm Kenny Klaus, and this is State 48 Homeowner.
Where did you get all this money?
It was easy. I took out a reverse mortgage, which is that thing where your house gives you free money.
Peter, how could you be so stupid? Reverse mortgages are a total scam. We could lose our house.
Relax, Lois. Tom Selleck made a whole video about that for the wives wearing his signature short shorts.
Hello, wives. I'm
Sold.
So, reverse mortgages, it's probably something that you've only heard about from William Shatner, Tom Selleck, or the late Alex Trebek. But let's get the information that is actually true and real, and probably go in a little bit more depth than what people probably understand. We've got Steve Farrington with Unity Home Loans. How you doing, Steve?
I'm awesome. How are you doing, Scott?
I am groovy. So I think people have a basic understanding or no understanding.
Sure.
But not that many people, unless they've had a reverse mortgage or their parents have had a reverse mortgage, really have a full picture of it.
100%. And even myself, being 20 plus years in the industry, it's one of those products that you have your own misconceptions of, because we do forward mortgages. So your standard Fannie Mae, Freddie Mac, FHA.
It's funny that we have to delineate. It's a forward mortgage.
That's a forward mortgage, and then even the reverse mortgage. But just wanting to kind of add to my repertoire and other products I have is that with Unity Home Loans, we've partnered with Mutual of Omaha Mortgage and other reverse mortgage, but Mutual of Omaha is what most people recognize because they are the number one reverse mortgage lender in the country. Mm-hmm. We're very blessed to have actually one of the top reverse mortgage account executives and lenders, people that actually originate reverse mortgages in the country that works for Mutual of Omaha. So I've actually gained extensive knowledge, and it's still, maybe 50%. So more than the general public, more than I knew 5 years ago, but there's still more to learn. And it's actually a fantastic product, but there's a lot of myths out there. Some of which I probably believed and repeated myself over the years. But yeah, and not knowing much, you probably know some of them as well.
Yeah, so let's go with the first one. Myth number one, they're going to take my house.
They're going to take the lender's going to take the title of my home. They're going to take my house, right? With a reverse. Well, the fact of it is actually no. The title on a reverse mortgage is no different than any other mortgage you have or have had in the past.
Okay.
You're still on title to the property, your spouse, your trust, whatever that may be, but they do put a lien against the property. So really, when the house is sold or becomes vacant, the loan gets paid off, but you are the owner of that property.
Okay. Yeah, I think a lot of people, I think that's probably the number one thing.
Yeah, you are still on title.
Myth number two, I've got to have good credit.
No. I mean, the requirements for reverse mortgage, they're not as strict as like a traditional mortgage. But the credit income are reviewed to ensure that the client themselves are in a safe financial state to do it, because there are still some obligations, and we'll cover those probably multiple times throughout. But again, in a reverse mortgage, all that you're responsible for is tax, insurance, HOA, and upkeep of the property. So they want to ensure that you can at least meet that obligation when it comes to reverse mortgage. But we've actually had clients who have had recent bankruptcy, recent foreclosure, that are recently delinquent on their current forward mortgage to be able to pay it off and do a reverse. So no, you don't have to have excellent credit to do a reverse mortgage.
The Klaus team is different. With the Klaus team, you have someone on your side. Where you live and make memories is important. We have more unique strategies than anyone else to help you accomplish what matters most to you. We can help you with traditional real estate as well as other options such as our lease purchase programs. We can help you buy first then sell, and we can bring you instant offers. We're here to help our neighbors achieve the American dream and help them build wealth through home ownership. For more info or to start your home search, visit us online at klausteam.com. All right, myth number three, I'm going to be upside down on the house.
Well, that you're going to be what? More than your house is worth?
More than the house is worth.
No, and all reverse mortgages, they're non-recourse loans. And what non-recourse means is that the borrower can never be personally liable for more than the home's value, period. So, and what that means, I'll kind of break it down for you, is that I think some of the conception comes is because it's a reverse mortgage, that interest accrues, so your balance actually increases in a reverse mortgage. Again, the reverse versus the forward, to where the balance of that interest, but it's also calculated against a very mild standard appreciation rate. So the value of your property goes up, the balance also goes up, and they counterbalance that. Again, it's a calculation that the reverse mortgage companies
bunch
do.
of nerds came together.
Bunch of nerds. Oh my, the algorithm to do it, I'm like, okay, never mind. And I consider myself a nerd, but that math. But as far as the non-recourse, what that means is, let's just say you take out a reverse mortgage on your property, Scott, and you pass away. Unfortunately, God forbid, you pass, and we've had this housing crisis that people forecasted was going to happen, or just the one that we did. Home values dropped 25 to 50% depending on your market. Now all of a sudden, I owe $400,000 on a home. The value is only $250 because something happened, something dramatic happened. $250. That's it. That's all. So anything over, that's all the bank's going to get. So
the bank's gambling on that.
The bank's gambling on it. So your heirs, your surviving spouse, your partner, whomever you're on title with or leaving the home to, they're not liable for anything more than the home's value, period.
Okay.
No exception to it. Sorry, that's kind of a long-winded answer, but I like people to be sure that they understand that. So if for any reason that the value drops more than what you owe, never more than that.
All right. So myth number 4, I can't get a reverse mortgage if I already have a mortgage, or if I do, I can't sell it.
Well, there's 2 in there, but I'll make it a little bit shorter than my last answer. Not true. If you've already got a mortgage, just need to make sure that there's enough equity based, again, off that calculation to pay off that mortgage for you. And then if you want to get cash out or anything after that, that there's enough equity in there to do that. And again, they calculate that to make sure it works. But no, absolutely, your actual current forward mortgage balance can be paid off. A HELOC, a first, a second, combined debt. And you can sell your house at any time.
So if I change my mind and decide, hey, I need to move.
Sure. If you need to move, if you need to sell, if you want to sell, like I want to go to Boca. I'm out of here. I'm moving to Boca, going to get a small condo. But no, absolutely, you can sell at any time, and you just pay off the balance that's owed. That's it.
Myth number 5. They're going to tell me what I can spend that money on.
No, it's your money. You can spend it whatever you want, man. And that's
Disney World.
It's your home. It's your money. No, you can spend, you can spend your tax-free money. And again, because if you take any portion of the equity out of the property, and there's multiple ways to do that as well. So if you do a reverse mortgage and you do want to get money or use it for an income stream, you can get a monthly distribution. You can get a lump sum distribution. You can get a line of credit that you can access at multiple times throughout. But no, it's your money. You can spend it on whatever you want.
All right.
that was an easy one. And you have options on how to receive that money that I already talked about, the line of credit, the lump sum, the monthly distribution. Because, a lot of clients think they're like, well, I want to take out a reverse mortgage and I want to take out $150,000 to supplement my retirement assets, or to pay for whatever, or just have it that nest egg. And you can, nope.
All right. So myth number 6, when I die and I leave the house to the kids, are they going to have to take over the loan?
No, absolutely not. The estate will inherit the home as usual. There's going to be no lien on the title for the reverse mortgage. So basically there'll be a lien on the title for the reverse mortgage loan plus any accrued interest and mortgage insurance premium. So let me give you an example because I like to talk numbers. So let's assume somebody takes out a reverse mortgage and they owe $50,000 after 5 years. The homeowner passes away. The estate then sells the house. So my mom passes away. She leaves me the home. Estate sells the house for $250,000. The lender gets $50,000 payoff that's owed, and then the $200,000 is distributed to the estate. That's it.
And the estate is the kids.
The estate's the kids.
Yeah.
Because that's typically, and again,
unless you hate your kids.
Well, and I get it, because a lot of times with a reverse mortgage, again, because of those misconceptions, those myths, urban legends, and it's been passed down. Again, I believe some of them myself, is that, the heirs are more concerned about the loss. And I'm not saying, they're like, oh, well, there goes my inheritance. It's more so to say, like, the bank owns the property. I can't sell the property. If mom and or dad pass away, the bank gets the home. It doesn't go to, the children, the kids, the grandkids, whatever. It's absolutely not true.
Okay.
Hey everyone, this is Kenny Klaus with Klaus Team Real Estate Solutions. We know there's a lot of confusion in today's market, whether it's billboards, TV, radio, mail. Everyone's trying to get your attention. They offer one lane, where at the Klaus Team, we have over 20 different programs. We can help you navigate through to find out what's best for you. And remember, we work for you, they work for themselves. We're here to represent you and make sure you have the best experience possible.
Visit us at klausteam.com/call-us-first.
Yeah.
Myth number 7, homeowners are routinely getting forced out of their homes when they have a reverse mortgage.
No, absolutely. Yeah. Somebody from the bank shows up to kick you out.
There's the reverse mortgage bus.
I don't mean to laugh about it, because it is terrible, but to think that, the HECM, as it's called, it's a FHA insured home equity collateralized mortgage loan, the reverse mortgage, that's just the fancy name for it. It was created specifically to allow seniors to live in their home for the rest of their lives without the burden of a monthly payment. And the homeowner, you're not going to be evicted, you're not going to be foreclosed on, as long as you meet the obligations of the loan. And again, those obligations are, you have to be current on your taxes. You have to maintain homeowners insurance, very much like you have to do with a forward mortgage. If there's an HOA has to be paid. And then upkeep of the property. I mean, you can't go into disrepair, Hurricane Katrina comes through and the roof's gone and you never get it replaced, because obviously that affects the value base of what the reverse mortgage was calculated on. So again, it's secured by. So again, absolutely not. They live in it, as long as they live in their primary residence as well too, because there's a misconception there, is that it has to be your primary residence. It can't be done on a secondary residence. It can't be done on an investment property, a reverse mortgage, I mean. It has to be your primary residence. So if you think that you're going to, slip one past the goalie and do a reverse mortgage on your second home that you're only in 3 months of the year because it's really cold in Minnesota or whatever Midwest state you're from, no, that could get you in trouble. But again, all of those are covered with you, all of those obligations and requirements.
All right, myth number 8, reverse mortgage lenders like to take advantage of seniors.
I only laugh. Not true, but...
Well, you think about the celebrities we mentioned before that are endorsing it. Alex Trebek seemed to be somebody that was pretty ethical.
Yeah, pretty ethical. The Shatner, Captain Kirk, we all like him. Except for the Family Guy skit. But they did pull out Tom Selleck and everything was okay after that. I hope Tom knows that he was on the Family Guy. But anyways, no, reverse mortgage lenders taking advantage of seniors. Unfortunately, there are people in my industry, just like any other, that yes, maybe. I'm not going to say they're trying to scam, but maybe they don't know. But as a consumer, you have to make sure that your reverse mortgage company is a member of the National, and I'm reading it because I want to make sure I get it right. It's a member of the National Reverse Mortgage Lenders Association. We have a code of conduct that we are beholden to as lenders, as fiduciaries, to ensure that it's done properly. Somebody qualifies. We're not forcing someone into a reverse mortgage. Okay. The other thing, our goal is to really help you make the most out of your retirement.
Well, and that's a huge piece, because it exists because the biggest investment in most people's world, the vast majority, 90% of Americans, their biggest investment is in the home that they're living in.
Sure. And a lot
and it's appreciated. Just look at the last couple of years, how much homes have appreciated, and it's a huge chunk of money that if it's just sitting there as equity,
right,
it's just sitting there. And Then you've got seniors that are on a fixed income that that Social Security check is not big.
Sure.
And retirement plans may not have done as good, or
the market shifted.
The market shifted, and now you're sitting on $300,000-$500,000 of equity. That you're just going to let it sit there until you pass and you give it to your kids, and you're eating ramen every night.
It's and of course we're in a time now to where that baby boomer generation is retiring at a record pace. Mm-hmm. At a record pace, and a lot of the wealth, just like most homeowners in America, a lot of their wealth is tied up in the equity of their property. And I don't know about you, but me personally, like, I would rather retire in place rather than maybe go to a care facility or have to downsize or move in with my kids, because I still have a $1,800 a month or $2,500 a month house payment, and the only way, I don't have $200,000 to pay it off, but I've got $300,000 in equity. Well, if I can do a reverse mortgage, get rid of that or the majority of that mortgage payment, and retire in place, stay in place is what they refer to it as, your quality of life goes up. Yeah. And that's really what it's all about. And that's what I try to preach to when I'm talking to people about a reverse mortgage. It's more about the quality of life of the senior and the homeowner. And I say senior lightly because I'm 8 years away from qualifying for a reverse mortgage. Being 54, you only have to be 62 years old to qualify for a reverse mortgage. And they used to have a stipulation that all members in the household had to be 62 or older, and now it's just one of the applicants for the reverse mortgage needs to be 62. So, if I turn 62, my wife's a couple years younger than me. Sorry, hun, I have to wait till you catch up to me. Not so much anymore.
So I think that there's a lot of seniors that have found young love along the way that are happy about that.
That are happy about that. There you go. And good for them.
Yeah,
Absolutely. Good for them.
So myth number 9, it's something that you have to do on your own.
Absolutely not. Not only do you have someone like myself who, is a member of that National Reverse Mortgage Association, but the reverse mortgage process, all clients, every single client is required to complete a counseling course with a U.S. Department of HUD approved advisor. And that's all they do is counsel people on a reverse mortgage, the ins and outs of it. They go over the details of it. Not just me selling you on it or whatever reverse mortgage lender you may be using. You're actually talking to a disinterested third party who has, and you've got to get that certification. You have to complete it. It's about an hour and a half call. It's about $110 fee, sometimes $150 depending on the state that you're in or county. But that's something you set up on your own. We give you 4 or 5 choices that are available. You call whomever you choose, schedule your time, do that counseling session. If you have concerned family members, the heirs, they can be on the call with you. They can be part of that counseling session. And it's fantastic. And again, that counselor will then provide, that certification that Scott went through it. He's approved, he understands, and it's a full disclosure and disclaimer rather than just what you're getting from your lender.
Okay, good.
Yeah, it's really nice.
All right, number 10, last one.
Last one.
If I outlive my life expectancy, if I as a male, hit 78 and a half, they're kicking me out of the house, putting me in a county facility.
Is that your life expectancy, Scott?
I don't know. I just guessed.
No, reverse mortgage lenders put no time limit on how long you can stay in your home.
Okay.
They use a life expectancy calculator. Most of them are set into the low to mid 90s. I mean, people are living a lot longer than they ever did in the past. And again, you have to be 62 for the minimum age, but you can apply for a reverse mortgage at any stage.
Okay.
Later in life. So you can be 74, 78, 83. But again, that calculation of what they're going to provide for you on the reverse mortgage, your age is part of that calculation because of the life expectancy. So they limit that so there is projected equity remaining in the home that you can still live comfortably in the property. So again, a lot of thought and care go into it. It's a very meticulous process. a lot longer than doing, a forward mortgage. Your standard, when you bought the home, you thought that was a lot to go through to do it. It's a lot more. And maybe we should do a pros and cons on the reverse mortgage. I'll give you some of the pros. I'll give you some of the cons of it. But no, at the end of the day, a reverse mortgage, I think we hit the nail on the head just a couple minutes ago. It's that quality of life. That's really what it's all about. And again, right now with the cost of housing going up, well, why sell if I could just stay? Something to consider.
If people want to get into a consultation with you, how do they get a hold of you?
Give me a call, 480-215-5590. You can email me, steve.farrington@unityhomeloans.com, or get a hold of us here at the Klaus team. I mean, you guys, we've been partners with you guys for 6-7 years now, so you know how to get a hold of me. Just reach out to the trusted resource here at the Klaus team, and they'll track me down.
All right. Thanks, Steve.
You bet, buddy. Take care.
Thanks for spending time with us this week at State 48 Homeowner, the ins and outs of owning an Arizona home. You can connect with us for more information, submit topics you'd like us to further discuss. You can see relevant videos, give us feedback, answer your real estate questions, and more at state48homeowner.com.